from last week. I got 2 positions on it, one of which I closed a little early. Second one I took and basically collected profits and let a runner run. And this is why you should let runners run. It's a 300 pip swing on GBP NZD. Obviously, I held it over the weekend, and yesterday, which was my birthday, it hit my final target. So basically, pretty straightforward stuff here, guys. We're talking about accumulation and distribution and the different phases of how that works. So anytime you have massive areas of consolidation, right, this is considered to be an accumulation phase. And what that means is there are buy and sell orders coming in and out, left and right. Tons of them. It's very choppy. It's consolidating, okay? The reason why I draw this box is because I didn't take these trades that are in here. This is let me know that we were going to have some sort of phase like that. So you look left always, try to figure out what has happened in the past with price and how price might react to that. So in this scenario, what we did is we know that we have a breakout to the upside here, right? This is our first higher highs being set. I drew this trend on the daily, so I knew that we were on some sort of bullish uptrend overall. So I look over here to the left and understand that this first initial distribution phase came from this accumulation phase. So the best way to kind of view it is we just look over here on our chart and figure out what happened. So price broke out above this previous high, right? Came back down to retest the accumulation area and then broke out to the upside, right? So we have a break of previous highs, retest of where all these orders are coming, and then a move to the upside. Price comes back down, retests the accumulation zone again, breaks up to the upside again. So that's basically what you're looking for is you want to figure out basically where your bottoms are at. Obviously, this is all down in here, which can count as it as well. And then a break to the upside, then the retest. Okay? Broke up again. We have higher highs again. So basically what you're looking for is once you see it come back down, you can understand that as a swing trader, you're going to be taking low risk positions. You aren't going to be taking, high lot positions so you can hold drawdown. But ideally, you see it come back down, reject, and you're in. And generally speaking, with this strategy, you are able to attack the same positions as before. Okay, so say we got it here, we don't want to get wicked out. You can run this all the way to the previous tops, right? 9 times out of 10 with this strategy, you are able to get the full move as long as you have patience. And this requires patience. This is a swing trade style setup. So we have it once, now a second time into this zone, basically, a rejection off of the tops of it, way up again, comes back down, and this is where I started seeing what was going to happen, right? So here we are in this area here now. We have the retest of the accumulation zone, liquidity grab for the pool below it, taps on the trend line. This is where I drew my trend line out from, and a push to the upside, okay? Upside again, back down, accumulation zone. I bought here, okay? Why did I buy there? Because it is the 5th time now we've had price reacting to this area. 1, 2, 3, 4, 5 times. Oops, sorry. And easy enough. The idea here is to catch this position and let it run up. So it tapped the daily channel, the daily trend, and brought up. I took partials here and I put my stop at entry. It came back down, stopped me out. So I was able to get in for a second position. Why did I do that? Because it came back down and tested my trend line again at that exact same price. So I grabbed it again because my overall bias on this is that we're going to reach the tops, okay? So I took my position again. Obviously, we have a tap on the daily trend line. Came up to where I had some, potential resistance. This is where I took my partial profits, right? I took 66% of the total lot size off of the table at this point, and then it ran back up to the very tops for a 300 pip swing. I don't really use many indicators, man, to to be honest with you. I'm only using the SMAs. I don't rely on them at all. It's just for overall momentum. So if you want to know what those are, you can see them. That's it. Everything else, I'm drawing on myself. So these are obviously the daily trend here. That's coming up. Tap of that, catch position, take my partials at this zone that I have noted as a potential support or resistance spot, and boom, up it goes. So that's how I swing trade. I'm looking for accumulation and distribution, which is a advanced version of the break and retest. Generally speaking, you can run these all the way up. You just have to have the patience to get it done, and that's it. So the trend lines obviously are just looking for breaks of structure. That's it. So this zone is, this is my basically buy zone here. Comes down, taps the daily trend. Okay, understanding how accumulation and distribution works, I am in for my buys to swing it back to the top. And that's the goal, guys. You want to try to get these positions, take partials early, and let the rest swing for a zero risk trade at that point. That's how I do it.